Hi and welcome to Investing 4.0 Visionary Investing in Future Trends. Sorry for the delay. I wanted to post a video last weekend and yeah, there are a lot of things that I have to deal with right now, and I'll probably make a video about this as well because, as I mentioned before, I'm in the middle of buying a house. We finally found a property and a house with a property. So I'm getting into all the financing part, into all the building a house part, because it's gonna be built. So we're gonna move in, if everything goes according to plan, in about 2 years. So this was a big priority, if you can understand that, for the last weeks, because you only make this decision once in your life. Usually, I mean, you can still move out or rent it out, but I wanted to spend the appropriate amount of time for this big decision, including getting on the whole topic of building a house and financing and all of it. So sorry for the delay. If you're interested in how it is to build a house in Germany or buy a house in Germany, then let me know down in the comments below, and I can probably make a little series or 1 or 2 videos about the topic if you're interested. But now back to Bitcoin. If you haven't seen my first video about the history of Bitcoin, then please pause this video right now and check it out. I'm going to post a link up here somewhere. There's a lot of things that we can learn about Bitcoin just by looking at the history. And if you're new to my channel, welcome. Investing 4.0 stands for high quality and non-hyped content to make you a more rational and well-informed investor. Today, we'll talk about the pros and cons, or the opportunities and risks of Bitcoin, and I'll always try to keep a look at it from an investor standpoint as well. I collected the most important ones in my perspective, so be aware that there are additional arguments for or against buying or investing in Bitcoin. So if you know about others, like pros and cons, please share them in the comments below as well, and let's have a good discussion to complete the whole picture. So without further ado, let's begin. Alright, a lot has happened since almost 2 weeks ago, and right after I posted my first video, Bitcoin dropped significantly from its all-time high. So as we're already talking about it, let's start with the cons or risks about Bitcoin. And the first one is clearly the volatility. The last month has been a great example of the volatility of Bitcoin. It surged from about $23,000 to almost 42, and then dropped sharply to about 31 right after. In the historic chart, we could observe similar price drops with the biggest swing in 2017 or beginning of 2018. Now, where does this high volatility actually come from? The Bitcoin exchanges ensure that the Bitcoin market remains liquid, so that there's enough money in the market by setting their value relative to traditional currencies, and thus allowing holders to profit from the speculations on fluctuations in that value. That said, Bitcoin users must understand that Bitcoin's value is subject to wild swings, and weekly moves of like 30 to 50% sometimes even in either direction, up or down, have occurred before, as we saw in the history video last time. So such swings are actually unheard of among other like stable fiat currencies like US dollars, euros, and so on. While Bitcoin's volatility sometimes offers short-term benefits for speculative traders, it renders the currency unsuitable for more conservative investors with long time horizons, in my opinion. And since Bitcoin's purchasing power varies so wildly from week to week, it's really difficult for consumers to use it as a legitimate means of exchange. So speculative day traders are probably happy about those wild swings. Long-term investors are probably not so happy about it though. Now, the second argument against Bitcoin are actually scams, and I'm actually connecting it right here to the hype or the so-called investment pornography at this point. As the world's most popular cryptocurrency, Bitcoin has seen a lot of scams and fraud and attacks. Even under my videos, as a new and super tiny YouTube channel, bots and people are like scamming and posting things here, how you can get rich through Bitcoin quickly. And I banned about 6 to 8 accounts under the first video that I posted before I noticed a certain pattern here. And I have a few screenshots here for you guys that show that there's a lot of scams and bots going on this topic. And that's a big indication that something's not right here. To be clear, other cryptocurrencies don't have the critical mass of users necessary to make it profitable for kernels. So if there's only a couple hundred people or 1,000 people in there, those big scams wouldn't be really profitable. The problem is that such activity, scams and so on, is more likely to be prosecuted by law enforcement agencies when it comes to traditional currencies and payment platforms, but more on that in a second. The amount of scams and bots we see is just a reaction to the hype that is generated around Bitcoin. And that's why I'm connecting the two topics, scams and fraud, and the hype here, as you can see. In my last video, I showed you guys the hypometer, as I call it, which is based on tweets about Bitcoin, and we do see a similar hype as back in 2017, right before the bubble burst. In my opinion, it's not the smartest decision to enter a stock or any kind of investment at the point of a hype. Now, I'm not sure if this is a hype, but there's a clear indication for this. This leaves me very skeptical at this very moment when it comes to considering investing into Bitcoin. The third argument actually is the value behind Bitcoin, and we talked about it in the last video as we compared Bitcoin to gold, so I won't cover it again in detail here. If you are an investor who likes to have some kind of added or real added value behind an investment as some kind of, let's say, safety, then Bitcoin is probably not for you. The short summary is that there is no real value behind Bitcoin other than the energy and the time that was used for the mining process. Bitcoin does not generate any value compared to stocks where you have products or services in the back that are generated for it. So, long story short, that's negative as well. The fourth point is the usage, and that is a big risk in my opinion. One of Bitcoin's biggest drawbacks is the lack of standardized policy for chargebacks or refunds, as all credit card companies and traditional online payment processors have. I mean, the whole purpose of Bitcoin is making payments faster and more safe, right? Now, users affected by transaction fraud, for instance, if you purchase goods that the seller never delivers to you, then you can't really request a refund through Bitcoin. In fact, Bitcoin's decentralized structure makes it impossible for any single party to arbitrage disputes between users. While the miners take responsibility for recording transactions, they are actually not qualified to assess their legitimacy. Some newer cryptocurrencies, such as Ripple, have rudimentary chargeback and refund functions, but this feature is actually not built into Bitcoin. And even if Bitcoin or other cryptos will have it in their feature, for example like Ripple, then we can suspect that the anonymity will be affected by this to a certain extent, but more on that in a second as well. An additional argument against the usage is the comparably slow payment process. Slow transactions are a major hurdle to adoption. Various cryptocurrencies differ in many ways, and there is an inconvenience related to certain specifics which has been a major barrier to the growth of crypto payments. For example, transactions confirmation of the Bitcoin network can take up to an hour, making it hard for people just to basically walk into a store and buy a cup of coffee and leave. This is due to the Bitcoin scalability problem, and the average block creation time is about 10 minutes, and the block size limit of 1 megabyte constrains the network throughput and thus can make the payment process rather slow. The last point here on the negative side is the carbon footprint. Now, as Bitcoin becomes more valuable, so too does the business of mining Bitcoin, but it comes at a notable cost. The consumption of vast amounts of electricity, often powered by non-renewable sources. According to the Bitcoin Energy Consumption Index, Bitcoin mining consumed approximately 51 trillion terawatts of electricity per year as of February 2018. That figure has risen steadily over time, irrespective of day-to-day market movements, prompting policymakers to take a closer look at Bitcoin's carbon footprint. One of the arguments is that if we compare Bitcoin to the traditional finance sector, the costs and the carbon footprint is way lower. Well, this is actually only one side of the coin here, as most of the work done by, for example, the banks or the Fed here is to stabilize and somehow control the economy. So a big chunk of the energy is actually not related to the currency side here. So this might be an argument for investing or not investing if you want to invest into eco-friendly or sustainable assets. Let's talk about safety. Bitcoin claims to be safe, and private keys are good, but only as long as you have the key, right? And virtual wallets that you can actually have as well when you buy Bitcoin on a, let's say, a smartphone app, are not actually safe, as we saw in the last video about the history. While traditional banks secure you against such hacks or fraud or whatever, this is not the case for Bitcoin. In case someone steals my credit card and buys stuff with it, for example, I'll get back most of my money from my bank. With Bitcoin, this option does not exist. These security risks are worthy of special consideration for anyone considering converting, for example, US dollars into Bitcoin. The fact that Bitcoin units are virtually impossible to duplicate does not mean that Bitcoin users are immune to theft or fraud, and the Bitcoin system has some imperfections and weak points that can be exploited by sophisticated hackers. The Mt. Gox incident, as I mentioned in the last video, as well as a host of smaller, less publicized incidents, underscore that Bitcoin exchanges are particularly vulnerable to theft by hacking. Several exchanges and digital wallets have been hacked with hundreds of millions of US dollars stolen. Two of Bitcoin's perceived strength, the political independence and the strong anonymity protections, actually makes it more attractive to thieves and fraudsters. In many jurisdictions, Bitcoin occupies a legal gray area, meaning that local law enforcement view theft prevention as a relatively low priority. Moreover, it's often difficult for the authorities to prosecute those responsible for the Bitcoin heists, many of which originate in politically unstable or unfriendly nations and affect a global population of Bitcoin holders. So it's almost impossible to basically find out who stole your money. So one more additional point that explains the big slurp that we saw in the last weeks of Bitcoin is that there's been rumors that for the first time someone paid with a Bitcoin twice. So basically there is, I forgot the term for it, but there is a word for it, that somebody used the same Bitcoin to purchase 2 times. So we basically got the first one for free, and that should not be happening. So there were some risks and people were skeptical if that might happen one day, and it actually, supposedly, the rumors say that it happened, which is again another big argument against safety and against investing into Bitcoin. So these were the most important arguments I found against Bitcoin. Now let's have a look at the pros or opportunities. And the first pro is the anonymity. Intense privacy protections are programmed into Bitcoin's source code, and the system is designed to publicly record Bitcoin transactions and other relevant data without revealing the identity of the individuals or groups involved. Instead, Bitcoin users are identified by public keys or numerical codes that identify them to other users. Additional protections allow users to further conceal the sources and flow of Bitcoins. So, for instance, special computer programs available to all Bitcoin users called mixing services privately swap a specific Bitcoin unit for another Bitcoin unit, and yeah, that is basically of identical value, and thereby they obscure the source of the owner's holdings even more. But if you want to buy on platforms like Overstock or Expedia, which now accept Bitcoin payments, they need a name and a shipping address, right? And as with most things, privacy and anonymity stands and falls with the user. What's interesting about Bitcoin as an investment is that usually services that offer anonymity or intransparency are often not the ones that are appreciated much by the investors. Anonymity is still connected to criminal or shady business, and Bitcoin suffers from this as well. But to be frank, this is probably just an image problem. Now, let's also talk about the reduced possibility of identity theft. This point is connected to anonymity, but is a big plus and thus makes it a separate point here. Whenever you share your credit card to a merchant to withdraw a small amount, for example, you provide that person with all of your details. A credit card works under a pull principle to withdraw the amount from your account. On the other hand, Bitcoin works under the push basis to withdraw the amount from your account. Only the exact amount can be removed from the Bitcoin transactions, only that information is passed on to the merchant. It does not require your names or any kind of identity information of yours, just the wallet ID and it's done. So that's a big plus. Point number 3 here is the increasing and wide acceptance of Bitcoin as a payment method. The number of merchants accepting Bitcoin is still very small, but it's growing. And thanks to big companies like I mentioned just a minute ago, Overstock or Expedia, that are jumping on board, it's possible to buy virtually any physical item using Bitcoin units. If you're serious about reducing your exposure to flat currencies, then Bitcoin's growing mainstream acceptance is likely to be a big help. Now, I would be interested to hear from you guys if you actually bought any goods using Bitcoin, for example on Overstock or Expedia. And did it work smoothly, or did you have any issues? Let me know down in the comments below. And also if you were actually able to return any goods if you bought them, that would be really super interesting from me. Now the fourth point is that international transactions are easier than with regular currencies. Bitcoin transactions that cross international borders are no different to Bitcoin transactions that are in country. There aren't any international transaction fees or red tape to navigate, as it's often the case with credit card payments, ATM cash withdrawals, and international money transfers. International credit card and ATM fees can range up to like 3% of transaction value and sometimes higher, while money transfer fees can be as high as 15%. While most other cryptocurrencies lack international red tape, cross-border Bitcoin transactions are easier simply because Bitcoin is more popular around the world. This is specifically interesting for the emerging markets and countries that lack a good infrastructure. Small money transfers can be made from like a smartphone without huge fees, so that's a big plus. Point number 5 here on the plus side, and that's the last point, is the independence from political agents and creators. Since Bitcoin isn't created or controlled by any state entity such as a central bank, it's not affected to political influence. At least that is the claim. Since it exists outside of any political system, it's also much harder for governments to freeze or seize Bitcoin units, whether in the course of legitimate criminal investigations or as retribution for political acts. Due to its completely decentralized nature, popularity, and liquidity, Bitcoin is also immune to its creators, which is a big benefit here. Many less popular cryptocurrencies are characterized by concentrated holdings, and thus the majority of the existing units are held in a handful of accounts, and if they sell, big swings will occur as well. This allows the currency's creators to manipulate supply and, to an extent, the value relative to other cryptocurrencies negatively, impacting other holders. So it is by no means completely independent and can be subject to regulations or censorship. We can also see that PayPal and other companies are jumping on the crypto train, but what is interesting is the following. BitPay, one of the big players on the crypto market, which is operating with a similar model to PayPal, providing payment services to enable merchants to accept Bitcoin basically as a form of payment, just filed to become a federal regulated US bank. So paying in Bitcoin is basically no different to traditional currencies, with more of those exchanges actually becoming banks, with a bank in between the transactions, as most of the merchants are still depending on them to organize the payments. So from my point of view, this point is, let's say, rather neutral. It's obviously mentioned on the positive side and on the negative side, but they equal each other out. If we really observe that more and more Bitcoin exchanges become banks and are more regulated for that reason, that might have a big impact on Bitcoin. Alright, we talked about the main pros and cons, and if I missed any or if you have additional points to make as mentioned, then please share them in the comments below and let's have a good discussion about it. I know that there are a lot of people that are really hyped about Bitcoin or really skeptical, and getting all of these arguments together will probably help all of us. I commented on some of the pros and cons from an investor standpoint, but let's wrap this video up with a summarized look at Bitcoin as investment. Originally, I wanted to post 3 videos about Bitcoin, but I decided just to split this topic into 2 videos and will thus share my opinion on Bitcoin as an investment right now. For me, one of the biggest drawbacks is that Bitcoin adds no real value or no added value, and thus is strong subject to hypes and speculations, but that is just me, and I understand that there might be investors out there that are willing to take a higher risk. For all its promise, in my opinion, Bitcoin remains a niche currency that's subject to wild value fluctuations, as we saw. From my perspective, despite the hype, or even because of the hype, it's clearly not a legitimate investment or trading vehicle, as is the case with like stable national currencies such as US dollar, the Japanese yen, and the euro. Now, why is that? The simple reason is that with the lack of added value, most of the swings cannot really be explained, and not even after they happened. For the time being, treat Bitcoin as you would treat any other very speculative asset. Move cautiously, only invest a little bit of money or not at all, and if you want to invest, then invest money that you can afford to lose. I would rather look at Bitcoin by comparing it with a lottery ticket it could really make you a millionaire in no time, and it could also completely lose all of your money that you invested. That was my final statement about Bitcoin. I know it's a long video right now, so thanks for everyone who's watching the whole video. And yes, it's okay if you watch it at 1.5 speed. I don't really care. But if you like this video, please leave a like and subscribe to my channel to help me to beat the YouTube algorithm. But yeah, that's it for now. See you next time. I'm out.